You're either magnetically attracting the capital or you're rejecting it. So MicroStrategy stumbled on a new idea: recapitalize on an asset which is accretive, not dilutive. And when we did that, we started attracting more capital. We went from having 500 million of cash non-performing, like a liability, to having 45 billion worth of Bitcoin going up 60% a year.
MicroStrategy's founder and executive chairman, Michael Saylor, claims that instead of creating money, Microsoft and Nvidia are destroying it through dividends and stock buybacks. Their cash value will gradually decline due to this cycle. This is what Michael Saylor is attempting to convey. Saylor argues that because negative real returns on bonds must be paid in the current financial system, firms handle capital as though it were debt. Two persistent issues are inflation and a faulty economic model, which encourage businesses to spend money as quickly as possible. Saylor believes that, in contrast to conventional assets that deteriorate over time, Bitcoin is the only solution to the current financial predicament. Wall Street doesn't want companies or individuals to realize that Bitcoin provides a way to preserve and multiply capital. It's the lifeboat out of a sinking system, because if they do, the entire financial power structure could collapse overnight. Be sure to watch the entire video. Here's Michael Saylor explaining why Bitcoin is the only defense against the system. Additionally, only a small portion of my viewers are subscribers. If you enjoy finance-related content, consider liking or subscribing to the video. It's free, and you can always change your mind.
Because a brainless investor can take the money and buy the S&P index, and they can do that. That is the hurdle rate. And it doesn't take a rocket scientist to figure out that if you're buying T-bills and you're getting 3% after tax, and if the hurdle rate is 12%, you're underperforming by 9%. That means holding $1 billion of capital, you burn 90 million a year. Holding 100 billion in capital, you burn 9 billion a year in shareholder value. And so the big idea here is that in the year 2024, the SEC approved the first digital commodity in the history of the world, Bitcoin, and fair value accounting became optional. And in January of 2025, this month, fair value accounting for that digital commodity became mandatory. And we expect in the first week of the Trump administration for SAB 121 to be repealed, and that means that every major bank in the world will be allowed to bank Bitcoin. So what you have is a status quo for 80 years where a corporation could have all of their assets in real estate, in gold, in soybeans, in oil, or in treasuries. But of course, the only thing that looks liquid and fungible is treasuries, and it doesn't beat the cost of capital. And now Satoshi invents this new digital commodity. It takes 15 years for people to decide that it isn't tulip bulbs. It takes many years for the government to embrace it. And in the year 2025 is probably the first year where you could reasonably say the banks will probably handle it, the government's not going to ban it, and it really is a commodity. And so now, if you run a publicly traded company, you have a choice between Bitcoin or bonds. And the bonds are minus 10% real yield, and the Bitcoin is plus 45% real yield for the past 8 years. And you know, you might not be sure that you're going to keep getting plus 45% real yield, but I would submit to you that even if Bitcoin's returns collapse to the S&P index, and if you said it's just as good as the S&P, having a commodity that performs like the S&P is 10% better than using a bond. And so the real revolution in corporate finance for a CEO is you have the opportunity to recapitalize a company on a BTC standard instead of a USD standard. And what that means physically is you go from being negatively polarized to capital to being positively polarized to capital. Instead of being repulsive to capital, you're attractive. Wouldn't you like to walk into a meetings and be attractive instead of being repulsive when you walk in the meeting? And what that means to MicroStrategy is we just stumbled on this. We discovered this. We weren't trying to discover it. We were in the middle of the lockdowns, and we were kind of irritated, frustrated, desperate. And so we had 500 million of capital with zero return, and we thought we got to invest in something. Should we buy gold? Should we buy art? Should we buy real estate? Should we buy diamonds? Or should we buy crypto gold? And we thought, well, we'll buy some crypto gold called Bitcoin, and we inadvertently recapitalized to the BTC standard. And then, of course, if your capital is returning more than the S&P 500, you're creating shareholder value. How much capital can you gather? Like, if I'm a hedge fund and I say I return consistently twice the S&P 500, how much do you want to invest in me? The answer is, how much money do you want? And if I go to you and I say I'm a hedge fund and I consistently underperform the S&P by 50%, how much capital do you want to invest in me? None. You're either magnetically attracting the capital or you're rejecting it. So MicroStrategy stumbled on a new idea: recapitalize on an asset which is accretive, not dilutive. And when we did that, we started attracting more capital. We went from having 500 million of cash non-performing, like a liability, to having 45 billion worth of Bitcoin going up 60% a year. And we went from a $600 million enterprise value to a $100 billion enterprise value. And we went from not being able to borrow any money to borrowing $7 billion for almost nothing. And we went from not being able to sell, we couldn't have sold the entire company for $10 a share. We couldn't have sold it for $1 billion or whatever, to being able to sell $18 billion of equity at, 30x the price. And what's happening? It's we simply changed the polarity of the balance sheet. And I think that's the exciting opportunity for a public company, or any financeable company. Any company that can raise equity or debt financing has a use of proceeds which is transparent, high speed, accretive, and scalable. And you didn't have it 4 years ago. You didn't have it 10 years ago. You never had it for 100 years. All corporate finance textbooks, every course at Harvard, they're all built on a US dollar treasury standard in the absence of a crypto capital network. And I think now you have to rethink corporate finance. You have to rethink everything.
Those who are ready to take risks and withstand market swings are the ones who stand to benefit from typical corporate finance, which treats capital like a liability, as seen with businesses like Apple. Michael Saylor views the volatility of Bitcoin as a significant advantage rather than a flaw. Nvidia and Microsoft are rushing to get rid of their cash by buying back their own stock and paying dividends. According to Saylor, this approach stems from a flawed financial system in which the value of holding capital in bonds with negative real yields decreases over time. Instead of playing that game, Saylor believes businesses should turn to Bitcoin as a powerful capital asset that preserves wealth and has the potential to drive massive gains. While giants like Microsoft may ignore Bitcoin, other companies, especially those looking to compete or disrupt the market, are more likely to recognize its strategic value and take the leap. Now let's return to Michael Saylor for more insights.
I think if you could build it from first principles. You said, okay, I got 100 rich families. They live in 47 countries. And they all have this thought that they don't really trust their banks, and they don't really trust their governments, and they don't trust the currency. And they're okay in their country for now, but they might need to leave their country sometime in the next 30 years. And so they come together and they think, where should we put our money? Okay, like the big idea is we want to keep our money. Okay, and so you know, as I said, if God came down and said, I'll run the bank for you and I'm going to issue you God coin, there's going to be 21 million of them, and then you can telepathically move them between each other, and I will custody God coin for the next million years for free for you, then all these rich people would put their money in God's bank, and they would use the God coin, and it would serve as a store of value for them because it's better than gold, it's better than diamonds, it's better than buying Picasso artworks, it's better than buying the local bonds, you know, in whatever local African country you live in, etc. But God hasn't chosen to do that. So the next best thing is maybe they decide to hire a computer programmer and they get some cypherpunk or some engineer and they say, can you actually program a digital bank that does the same thing? So it's not going to be God coin, it's going to be Bitcoin. And we want you to set it up so that we can buy, you know, so you've got 21 million of these units. And we're going to put our money in the Bitcoin bank. And that way we don't trust any other bank and any other government. And it's just it's a network that we all join, a secure monetary network. And then at some point, one of them says, well, I don't think I trust you. And so none of the 100 families trust each other. And maybe even if they did, they don't trust their idiot grandsons that will come along in 60 years. So the question is, how do you actually create the Bitcoin network or the Bitcoin bank such that it is stable, it'll go on for hundreds of years when no one trusts anybody? What's the solution? And the answer is, we create a version of the software and we give it to everybody. And everybody on the network gets to run the software, and the software checks everybody else's software, and anybody that ends up lying gets kicked off the network. So every single family runs a version of the bank, and maybe every person in the family runs a version of the bank, and that's how we get to a decentralized network. Pretty soon, everybody with money on the network is running the software. Now, how do you secure it? Well, we need somehow to give it some anchor in the real world. So the software we run turns electricity into hashes, and the hashes are used to randomize the transactions on the network. And if you end up with billions and trillions and hundreds of quadrillions of hashes, pretty soon nobody knows who's going to build the next transaction block. But what you do know is that it's impossible for you to hack the thing with any sleight of hand. And so why is it not tulips? It's not tulips because all of the smart money in the world wanted to solve this problem. Why wouldn't you, right? Like for 1,000 years, people have wanted to keep their money. It's like the theme of human history. People want to keep their money. So they want to solve the problem. This is a crypto solution to the problem. I create a bank in cyberspace to keep my money. And then it gets copied 100,000 times. And the first 50 times it fails, and then eventually someone has a good one, and we call the good one, the one that won was the one that won, right? I mean, why did you win, and why did everybody else lose? Someone had to win. There had to be one Google. There had to be one Microsoft. Why are we speaking English? Why aren't we speaking French? There had to be a winning language, and why do we use the US dollar? Because there was a winner, right? So at the end of the day, the idea is simple. It's a decentralized network protocol to keep your money without depending upon a government or a corporation or without relying on anybody, right? It's a protocol for economic integrity. It's obviously a good idea. You can duplicate 1,000,000 times, just like you can copy Wikipedia 1,000,000 times, but there's got to be one winning network, and the winning network is the one where all the smart people with the money join. It's just like, you know, if everybody puts their money in JP Morgan and you have Yo-Yo Bank, which is cheaper, but all the rich people have their money in JP Morgan, it's probably safer to put your money in the bank with all the rich people. Why? I copied New York City and Kansas. Why don't people move there? Well, they can either go to New York or they can go to Kansas, York, and they just went to New York. There's a lot of reasons why. And so Bitcoin is the most powerful crypto network in the world. It's got all the computer power. It's got all the economic power. It's got all the political power. It's got all the electrical power. Is it not tulip bulbs? It's 20 nuclear reactors worth of electricity, right? That's how it's not tulip bulbs. And another way to say it, though, it is basically, it is a monetary union. If you join a union and a million other workers join the union and all of you get together and collectively negotiate your salary and your salaries go up by 50% and some guy writes an article saying, isn't that tulips? What is, no, there's a million people, we all joined together to protect our own interests. How about a million-person army? I got an army in front of you, we have guns, you disagree with me, you could say it's not an army, but there's the army, right? So Bitcoin is, in essence, it's a monetary network, and it formed organically through a competitive process, and every weaker idea or inferior idea failed in the marketplace of ideas. And the ultimate endorsement of a monetary network is somebody with $1 billion willing to put their money into the monetary network.
Michael Saylor highlights the widening gap between businesses with and without monopolistic power. While companies with unregulated monopolies, like Microsoft, can continue to thrive until stricter regulations emerge, Saylor views Bitcoin as a lifeline that offers a way to recapitalize and transform their balance sheets. He claims that businesses without monopolies or significant digital dominance face mounting pressures, often leading them to desperate measures like selling themselves, leveraging buyouts, or overextending their operations. He believes companies that are in danger of failing or have nothing to lose are much more likely to use audacious tactics, like adopting Bitcoin, to turn around their fortunes. I sincerely hope that everyone found today's video entertaining and useful. As always, best wishes, and I'll see you all at the next one.